Hey, good morning, everybody. Paul Obrantz with This Week in Interest Rates. We're going to shift a little bit on how we do this because I want to focus more on what home buyers should be, what they should be exposed to, knowing there's so much going on in the media with interest rates, with housing. Let's break some of that down so you can make an informed decision on whether or not buying a home is right for you, or perhaps you're looking to refinance on when and how to refinance. The how, maybe not so much, but the when, definitely. So let's go ahead and let's start a little bit. Let's start with interest rates. So we break down interest rates, and we're going to talk a little bit more about interest rates, but over the last 3 weeks, you've seen very little movement with rates. We've seen a little bit of ups and a little bit of downs. That wave the fluctuations have definitely calmed down, which has been nice to see. So buyers and people can start making calmer decisions and not make a decision today and tomorrow be so much more different as it relates to interest rates. So VA, FHA, 5.25, 5.375, conventional 5.75, jumbo 5.75. Now these rates are shown with 1 point. So what a point is, it's 1% of your loan amount. Essentially what you're doing by paying a point is you're prepaying interest up front in exchange for a lower payment. What you're betting on is that you're going to hold this mortgage long enough to where you'll recoup that cost of that point. That comes to the point. Let's talk about that in a little bit. But first, let's talk about an article that came out this week that may be a little bit confusing to first-time homebuyers in general, or just anyone who loves real estate. 60% of home buyers, this came out here. Let me make this bigger for you here. 60% of home buyers paid below asking price in 2025. Here's where they found the best deals. California's housing market is splitting into two. Now, it's certainly true that nationally, 60% of home buyers did pay below asking price. However, when you start really looking at the averages and where certain areas have definitely paid, we're talking Detroit, Fort Lauderdale, Tampa Bay. However, when we get closer to home, San Francisco, Oakland, San Jose, the Bay Area, that is not necessarily the case. In fact, we are seeing people outbid each other, a little mini bidding wars, not necessarily as extensive it was, a few years back, but we're starting to see that more and more in our area. So it's really important that if you're looking to buy a home, that even if you're not ready to buy yet, you're starting to get your real estate team and your lending team together early so you can be informed about what's going on in your local market and stop comparing your local market to the headlines when it's a national level here. So, another myth that we've been dealing with a lot, that I've been dealing with a lot of questions I get asked probably once a day, maybe every other day. Do I think interest rates are going to come down? I think it's really important to understand that I think yes and no, that, right now, when we look at how low rates are, if you recall a few weeks back, Trump ordered $200 billion in securities in treasuries, to be purchased in the bond market, which really helped interest rates come down. And I believe that these are artificially holding rates low. And so when we look at where the long-term projections are in 2026, taking a look here, the average is 6.17 on a 30-year fixed rate. We're well below that today. So as we start looking at whether I think rates are going to go down, the answer is yes and no. They're being held down artificially now as a result of that buyback. And I don't see them getting much better than where they're at today. In fact, that's actually great news because even in real estate, we're expecting kind of that sideways movement over the next year or so, which is really going to give home buyers, a chance to kind of catch their breath and figure out what is right for them. Now, the question is these rates low enough to get some people that want to sell in the market but what's preventing them is they have these 2-3% interest rates. So the cost of moving is a lot to them, even though they really want to. So time will tell. In fact, if we look historically, I think the next 2 to 3 months is really going to dictate what this year is going to look like as we head into spring. I can tell you that the last 2 weeks from my end has been extremely busy, with a lot more people getting pre-approved, refinancing. So we're starting to see that activity pick up, and it's really pointing in the direction it's going to be a strong year for real estate. Some good news out there. If you are a non-first-time home buyer, or if you're a first-time home buyer and you don't qualify for 100% financing, there is a program out there right now that will allow you to get 100% financing. There's no down payment. It's a great program that doesn't have the down payment limitations of some of these programs out there. So if you have been wanting to buy and you've been told no by banks or by other lenders, reach out. Would love to connect and see if this program is right for you. It's a great program. We just helped a family last week or maybe 2 weeks ago close on not their first home, their second home, using 100% financing. Now, if you are considering buying in 2026, or if you're thinking about refinancing, let's connect. Let's do a hopes and dreams conversation. Remember, there's no applications, no credit pulls. It's just me and you talking strategy, putting my 20 years of experience, not only in lending, but also in buying investment properties out there, and putting a plan in place for you and your family to save money and build your real estate portfolio. This week is going to be a big week in interest rates. There's some things that could definitely move the market, so you want to be aware of. Today, we're hearing from Fed Governor Waller and Miran. They are both voting members of the Fed, so the bond market will be paying attention closely to what they say. Tuesday, retail sales, employment cost index. Wednesday's mortgage applications. Here's the thing. I know this doesn't make sense, but I'm going to make it make sense for you. If you are looking to see what type of market this is going to become, whether a buyer's market or a seller's market, or how much competition is going to be out there when you're looking to buy a house, watch mortgage applications. Mortgage applications tells you how many people are applying for loans, which can indicate what the demand for housing is going to be. So that comes out Wednesday, Thursday, jobless claims, and Friday, consumer price index. That is it, my friends. I hope you have a wonderful week. If you're looking to buy or sell or refinance, even if you're not ready to do it today, it's never too soon to get your team ready together for you, especially if you're not working with a local great real estate agent. We work with the best. I would love to introduce you to people that we work with. They're going to take great care of you. They know the market. They know how to negotiate. They know how to get you into a house for less price, and even get some seller credits. All right, my friends, Paula Brandt's Clear to Close Brokers. Have a wonderful day.